The Bollinger Bands, with the default 2 standard deviation setting, are designed to capture around 95% of trading activity. Therefore, any activity above the upper band or below the lower band may be considered extreme and a good spot to trade against the trend. Buy low and sell high. For example, notice the long wicks that emerge above the upper band. We may sell at this point, with stops above the recent highs. Logically, if the market continues upward, we must exit the trade and take a small loss. On the other hand, as the market trades below the lower band, we may take profits on the short side and initiate a long trade, with stops below the recent low prices. Since the market tends to spend most of its time within a trading range, buy and sell orders should be placed just inside the Bollinger Bands. Notice the market actually trades at a slightly new low, which may appear to be a negative signal. However, the Bollinger Bands show us a great spot to take a position anticipating the range to continue. We can always add to our existing position, as long as the protective stops are moved up accordingly. Notice the long wicks that emerge at the bottom of the range, indicating the buying pressure may be stronger at this point. The Bollinger Bands can also be used to identify the breakouts or breakdowns that can occur from time to time. If the market trades at new highs or new lows while trading above or below either of these bands, we should be aware that a new trend might emerge. In fact, once the market trades at a new high or a new low, it may continue to do so for quite some time. In this situation, it would be advisable to stay on the sidelines until further confirmation is attained, such as a double top or double bottom pattern. At this point, we can actually add to the long trade as the market forms a higher low. Protective stops for the entire trade must be adjusted accordingly and placed below the recent lows. The market now breaks above the upper band, but fails to trade at a new high. We now have a great signal to take profits and initiate a short position with stops above the recent highs. The Bollinger Bands can help us identify the extreme market conditions and sit out the market noise that occurs most of the time.